You get paid for performance, not stories. This is a good one.
I don't know if you're a Silicon Valley fan. Oh, huge. So you might remember the scene when they're talking about revenue and Russ Hanneman comes in and he says, "Oh, we can't show revenue because the minute you show revenue, it's never enough." It's satire, but I think we smirk about it because we know there's a bit of a kernel of truth in that in many ways. Early stage, the investor questions that you get are more about belief. What do people want to believe about the market, the product, the vision? Later stage, it becomes a lot more forensic and formulaic. I remember going to some of these investor conferences, especially when you start talking to the long-only mutual fund managers, the hedge fund managers, and the folks who are just much more into the numbers. And you might get a question and it's, something 3 lines buried deep into your model, or they're asking about a metric that you talked about 6 months or 12 months ago. And you're thinking to yourself, I forgot that I said that. Or they might say, you said you were going to grow this thing 2%, you only grew 1%. Why? And I'd say, well, I'm still a growth stage company. I don't know. We might miss a number because my CRO woke up on the wrong side of bed one morning. But it was a real eye-opening experience just to see what being a public company is really like and what those expectations are like and what having to do exactly what you said you were going to do feels like.
It's a great call out that the metrics, not only the metrics, but the lens that you're put under in a later stage company, when you talk to these crossover funds, there's some 25-year-old analyst who knows what you said 6 months ago, and they're going to ask about it and bring it back and put it back into their own model. Jake, earlier you mentioned activist investors. Why does that matter for an acquirer and therefore matter to you?
So the acquirer has their own shareholders, their own board, and their own narrative that they need to manage. And Salesforce wasn't just deciding whether they liked to own as a business. Their management had to be able to communicate that story to their board and make that case to their board. And in turn, eventually the public markets. Why does it make strategic sense? Why does it make financial sense in the context of whatever they've already communicated out to the market? When you have an activist investor in their stock who might be enforcing some more discipline around capital allocation, it just means when there's a meaningful acquisition on the table, they're going to be a lot more thorough about it during their process.
Well, just to play this through, it sounds like you took it on yourself to arm them with the information they needed.
I always thought like an investment banker, even when I wasn't after the fact. That's one of the reasons why we were so prepared going into the deal or any capital raise. And it was exactly the same story going into the acquisition. The deal thesis has to be very clear. I always approach the capital raise as if I wanted to write the investment memo for the folks on the other side of the table.
Yeah, let me do it for you.
We understand what your strategy is. We know why this makes sense because we talk to you all the time about it. And how can we help make that a much more cogent story? What information do you need to actually prove that out?
I'm feeling another Silicon Valley reference in here. Triangulate your way to success.
Gratuitous, yes. They're not the conjoined triangles of success. There's so much benchmarking, there's so much data, there's so much content out there. These things are not a script, they're just a formula. You can't paint by numbers your way to success. Can't be top quartile on every metric at the same time. If you're trying to optimize everything, you're probably not making real strategic choices. We used to use benchmarks to put guardrails on the plan. Okay, roughly speaking, where do we think we need to be? We go off and make a plan based on what we knew we needed to accomplish. And then we would use the benchmarks again to sort of gut check. What trade-offs are we making? Did we make the right trade-offs? Do we understand holistically how our capital allocation decisions will ultimately create value? And we had a lot of great board members. Their pattern recognition is an invaluable resource. But at the end of the day, they only take snapshots of your business. They don't see the whole movie playing out. Ultimately, you are the one operating your business, not your board, not your investors. And you need to understand what actually makes your business tick and what actually creates value at the end of the day.
Can you just go a level deeper on that? Because I think it's an important message to people who are running a business and they get really nervous before the board meetings. They've done their prep. They've worked in this business day to day. What would you say about just having confidence in being there and just saying, hey, I know this better than anybody else?
I remember our CEO always telling me that I would almost script out my talk track before a board meeting.
I would literally script it out. It would be in the speaker notes.
And one time, I don't remember exactly why I didn't do that, whether it was I just didn't have the time to prepare or I just decided to do something different one day, but I just came in and I can't say that I winged it. I just went in and I talk about the business the best way that I knew how. And he came out after the meeting and he said, you were just naturally you and you weren't trying to perform. And it was so much better because you know what you're talking about. We can sit here, we can look at all the metrics all we want. We can soak up great content, podcasts and newsletters and blogs, and you talk to other operators and try to learn and be a sponge as much as you can. But again, at the end of the day, you're the one who knows your business the best. Collect data points, try to do some pattern matching, but on the outcome.
How did you know it was the right time to maximize value for your shareholders?
It's not, hey, this is the time we need to sell. It was sort of like being an athlete, who gets to the end of their career and they always say, I'm not ready yet, but I'll know when it's time. We sort of felt the same way. When you know. We had a really strong bid from the best possible strategic acquirer. With the benefit of hindsight, the IPO markets are, for all intents and purposes, still pretty shut for software companies. Sponsor activity's been pretty muted and strategic activity's been pretty hit or miss too. The question for us became what outcome best balances investor interest, employee interest, customer interest, and the long-term value of the company. And we felt that the deal that we had on the table did that, turn years of work into real value for our shareholders, for our employees, and it put the company in a place where what we built could continue to matter.
I think what a lot of people don't realize is the valuation number that you take on can also become a limiting factor in terms of your exit opportunities. Like, that's amazing, 2.1 billion. But there aren't many companies who can write a check for 2.1 billion. So I used to joke with like security companies, like if you get so big, like eventually it's only Palo Alto or Google can buy you.
That's exactly right. So again, it always comes back to controlling your own destiny.
I've seen a lot of FP&A tools, and Aleph is one of the few that gave me that aha moment within minutes. I remember watching their founder, shout out to Albert, connect my NetSuite data and build me a full P&L live in minutes. Aleph is now trusted by hundreds of leading companies. I've had the CFOs from Turo, 8Sleep, Zapier, and more on the pod, and every one of them is a huge advocate. I also just published my second annual CFO Tech Stack report, and Aleph has been on the podium both years, including a #1 finish in the $50 to $100 million segment this year. Instead of being just another planning tool, they built a real enterprise-grade data foundation for finance, implemented at startup speed with AI-native workflows woven into its DNA. All your systems, ERP, CRM, HRIS, ATS, product usage, and more, powering one clean, governed data layer that finance can actually trust. And with AI moving as fast as it is, they're pushing even further. MCP, custom AI chatbots, AI-powered variance analysis, and the list keeps growing. Try it with your own data at getaleph.com/run. That is GETALEPH.com/run. Tell them CJ sent you.